talk a lot about retirement on this program, and financing your retirement is something we do focus on, but particularly how you finance everyday living.
Yes, Clinton, following our show last week really got me thinking about retirement. I mean, we can be retired for 20 to 30 years, maybe even longer for some of us. And not having that paycheck coming in, each week would be pretty daunting because a lot of that actually stops when you retire.
That's something you've got to think about. Planning what to do with any money you do have and make your money work for you.
Exactly. So today, Chris Andrews, who is the Vice President and Chief Investment Officer at Trobe Financial Services, is joining us to explain one way to invest your money that even in retirement means that each month you have money coming in, a bit like a paycheck. Welcome, Chris.
You have a mortgage credit fund that offers a really decent return on your money. Can you explain exactly what your fund is and how it works?
Yes, certainly. Well, look, the Trobe Financial's philosophy, if you like, is built on its 65 years of experience. So we were started in 1952 and we were built on this philosophy that investment didn't have to be complicated to be successful. In fact, we often quote to our investors that famous quote from Warren Buffett that investment is not like Olympic diving. You don't get bonus points for degree of difficulty. So what we do is very straightforward. We go out to the market, we find really good quality borrowers, we do a very careful credit assessment of those borrowers, and we make a loan to them. So it is the borrower's monthly repayments that generate the returns for the investors. And that has been really successful. So if you look at our 12-month term account, that's been going since 2002. So 15 years, it's got about 750 million in funds under management. So we've got thousands of investors across Australia invested in the 12-month term account. It has never lost a cent of capital for any of its investors, and it's never missed a monthly interest payment. It's been a really successful strategy. In fact, it's won Best Mortgage Fund for the last 8 consecutive years. So it's been a really strong performer for investors, and I think that shows the power of choosing a really simple, transparent investment model, and then adapting that in a really careful and thorough way for the benefit of investors.
So if you're retired, and I don't know if you actually have to be retired, but if you are retired and say a friend of mine's mum sold her home, moved into a retirement village, had $400,000 left over and she didn't know what to do with her money, but of course being 80 she didn't want to go into something risky, but she wanted to get something that provided a good return. Would this be appropriate for someone like her?
Well, these are the sorts of stories we hear all the time. Whilst you don't have to be a retiree to invest at Trobe Financial, we do hear this same sort of story again and again. Our investors say to us they're a bit concerned about going into the share market and all the volatility, as people call it, which means one day you can be going really well and the next day things turn south on you. So we're really careful about protecting investors from that sort of volatility. And the strategy we adopt is that capital stable, as they say in the trade, type of investment where we aim first to preserve the investor's capital, so to look after that initial investment amount, and then generate that regular monthly income and just sort of pay that like clockwork month in, month out, which can help investors cover living expenses and the like.
So, Chris, what is the security? I mean, is our money safe? That's the question everybody wants to know.
Of course, yes, and rightly so. And could I say, any investor who is considering any investment should always be asking themselves that question very, very carefully. We have in our investment program a number of layers of risk protection. So first and foremost, of course, is a very careful asset selection process. Every loan we do, very, very detailed credit assessment. It's something that we take very seriously indeed. Another part of the program that's really important is low loan-to-value ratios. So the most we will lend to for the 12-month term account is 75% of the independent valuation of the security property. So we take a registered first mortgage, we have a valuer independently value that property, and the most we will lend to is 75%. We want to build in a really strong margin for safety for our investors. And that's why we take that approach.
And investors can get a good return on their money?
Yes, so the 12-month term account is currently paying 5.2%.
That's really good.
Per annum.
That's much better than banks, yeah.
We are well aware that a lot of investors will be looking at sort of what they're getting in their bank accounts and comparing it to that. Now, it's important, of course, to say this isn't a bank account,
sure,
but we think that paying 5.2% per annum is a really strong a really strong return for investors, particularly given the track record that we've delivered over the last 15 years.
That is a very safe and honest way of looking at financing your retirement, and 5.2% compared to what you're going to get in the bank is just quite amazing. Thank you for your time today, Chris.
Thank you, Clinton. Really great talking to you all.
Thanks, Chris.